Okay, so I've started recording this session, and what I thought I'd do first is, because this is something new for me, but I think it can work quite well, is that I'm just going to show you what I intend doing to finish Chapter 11 Statement of Cash Flows. You will find this on ClickUp under my Chapter 11 folder, what I'm showing you now, but we're here on Wednesday, and I'm going to do virtual lecture 3 with you today. You'll be able to download the slides. They already are on ClickUp as well. And then tomorrow I'm going to do virtual lecture 4, which basically means question 11.5. And then on Friday I'm going to do question 11.3 and Monday question 11.8. Then we actually will be finished with our syllabus. There is another question which Mrs. Cloutier has pre-recorded, which is a video under Subject Content English, Chapter 11, that you can also go and look at in your own time. We will post a revised program on Friday, but what I intend doing after that is having some revision sessions like this, where we do a virtual classroom, and then I'll record the revision sessions so that everyone can look at them later on. What I would like, though, is for you to please start sending me emails of what you would like to me to cover in the revision session. I hope you've all seen we've posted quite a detailed scope onto ClickUp of what's in the exam, so you can have a look at that and then let us know what it is that you need help with. So we'll post on Friday this week what we plan for next week. But at the moment, you've got the plan from me of what I'm going to be doing until Monday. With regard to downloading this lecture, I've actually put the instructions on ClickUp already, but I'll give everyone I'll put up an announcement directing you to the instructions so that you can see how to download the lecture afterwards. Okay. So that's the first thing I wanted to show you. Now I'm going to start with my actual slides. Okay. All right. Okay. So as I said, my slides are also on ClickUp, so you can download them from there. Today is going to be the last little bit, if you like, of theory on cash flows. Although it's not theory, I'm actually going to be doing examples with you. But from tomorrow's class onwards, I will actually be doing questions with you, which I think are important for cash flows. And you will have seen there's a 17-mark question on cash flows in the exam. So these are our outcomes. We're going to look at cash flows from investing and financing activities today, discussing how those are done. And we're going to finalize the preparation of the statement of cash flows by using example 11.1. I'm then also going to look at question 11.2 and finishing off question 11.4. If you haven't had a chance to, I do suggest that you go and look at the previous lectures that I've loaded, lectures 1 and 2, because they are they're the background that you need before you actually should be starting this session. Okay. All right. So that's what we're going to be doing. So remember, the cash flows has 3 sections to it, the cash flow statement: an operating activity, investing activity, and financing activity section. You will remember that when you've done, for example, a statement of financial position or a statement of profit and loss, that we can't in an exam ask you everything. So with a statement of financial position, for example, we might just ask you to show the current assets section. It's the same with the statement of cash flows. We might just ask you to show one of the sections of the statement of cash flows, maybe the operating section or the investing section or the financing section, or we might ask you to show more than one of those. Then the final section of the statement of cash flows we're going to deal with today as well is the changes in cash and cash equivalents, because this is what the cash flow statement is all about. We take the cash that we had at the beginning of the year and then we look at what we've received in terms of cash flows from operating, investing, and financing activities, and then we balance to the cash on hand at the end of the year. So what I'm saying to you is you need to be able to do the whole thing, but expect in the exam to just get part of the cash flow question. So you need to be able to just do single parts of the cash flow section. So we could ask one of those. Okay, so this is what the statement of cash flows looks like. This is on page 287 of your book. And I already did part A in lecture 2. And I'm now, in fact, that was in lecture 1. I'm now going to be looking at the cash flow from investing activities and the cash flow from financing activities. Very important that you realize we add the cash flows from operating activities, investing activities, and financing activities together, and then we're going to get a net increase or decrease in cash and cash equivalents. That's going to be the total of the three. As I talk about cash flows, I'm going to try and talk about inflows and outflows of cash, and those are critical that you do get them right, because outflows of cash must always have a bracket, and inflows of cash will not have a bracket. Okay? Under investing activities, when we acquire assets for expansion or replacement purposes, that will always have a bracket because we're spending money. But when we receive proceeds from disposal of non-current assets, then it won't be a bracket because we actually are receiving money. If we obtain an investment, then we're spending money, that will be a bracket. But if we sell an investment, we're receiving money and there won't be a bracket. So you need to make sure that you're clear on that. Also with financing activities, if the owners contribute capital, there's no bracket because it's money coming in. But if we repay a loan, for example, there will be a bracket because we're paying money. But if we obtain a loan, then we are going to be no bracket because we're receiving money. Okay. So let's just quickly talk about the investing activities section. So here we're going to show outflows where we acquire PPE, intangible assets and investments, and we're also going to show receipts or inflows from the sale of all of those things. On your cash flows statement itself, you're going to, under the acquisition section, and we'll talk about this in examples, the thing that's important to remember is you're going to have to separate PPE that was acquired for expansion purposes, which we call additions, and PPE that was acquired to replace equipment or property, whatever it is that we've sold. So you'll see that coming up in the questions as well, and it's required that you distinguish between the two. As I've said before, please learn the format, make sure you know the wording of the cash flow statement. Okay, so when you calculate the cash flows from investing activities, the first step is always to look at the closing balance of an item and subtract the opening balance from it. So if the closing balance is bigger than the opening balance, it means that you've spent money because your asset is increasing. If you're replacing PPE and you can't, and you've got different things that have happened in your account, it's often that you're going to have to reconstruct the asset account to determine how much money you actually paid to acquire a replacement asset. And when you're selling an asset, we'll go back to using the asset realization account that we did when we did PPE, and you'll often have to reconstruct that as well to get the cash that you actually received from selling an asset. We are going to finish this section of investing activities by doing question 11.2. I'm not doing that in lecture 4, I'm going to be doing that with you now. Okay, so in example 11.1, if you'd like to follow in your books, example 11.1 is in, I'm just trying to look for it in my own book here for you. Starts on page 292. Okay, so we're looking at the investing activities section. So when we do that, we're looking at these items on the statement of financial position. And for the property, plant and equipment, I can't just take the opening balance, subtract the opening and the closing balances and look at the difference. I see there's an increase, so obviously I must have acquired some PPE during the year, but there would also have been depreciation, which would have decreased the balance. So I've got to go and look at the PPE note to find what the movements were on PPE for the year. For the financial assets, if I don't have a note, all I have to do is take the 85,800 and subtract 109,100. There are less financial assets. That means we've invested less money. We've actually recovered or got back some of the money from the investments. Maybe we withdrew it from our investment. So this is actually going to be an inflow of cash because this asset is decreasing. So when asset increases, you have an outflow. When the asset decreases, you have an inflow. Also then looking at the question, under the statement of changes in equity, there's not going to be anything we need to look at. With the PPE note, the item that's perhaps most important is the item entitled acquisitions, that 55,190. All we're going to need to check is whether any of those, if there are acquisitions maybe of two items and one is an addition and one is a replacement, because then you'll have to disclose that separately. But in this question, if I remember correctly, it's just one item. And on your PPE note, this is always the actual amount of money that you paid. So this is the amount that's going to go into the investing activities section of your cash flow statement. Then the other totals, it's also just, sorry, let me go back there. It's also important to remember that things like depreciation are not a cash flow item. With these amounts that come from your statement of profit and loss, they're not really going to affect the investing activities section of your cash flow statement. Okay, so this is the solution for the investing activities section of example 11.1. Here is the purchase of property, plant and equipment, 55,190. You'll see it's in a bracket because it's an outflow. And here's the investment sold. Remember, this is the opening balance, and this is, sorry, that's the closing balance there, and this is the opening balance, okay? So if you take the 85, which is your opening balance, and you subtract the 109,100, it doesn't really matter which way you do it around. Sorry, I'm doing this the wrong way around. This is the opening balance. Sorry, I'm also learning how to type as I talk to you. And this is the closing balance here. So the difference between the two showed us a decrease of 23,300, which effectively means the investment became less. We would have sold part of our investment, recovered part of our investment. They don't give specifics, but it basically means because the asset is less, there is actually going to be an inflow of cash which doesn't have a bracket. Okay. So now we're going to look at question 11.2 from your question book. This question is good because you're going to actually be reconstructing ledger accounts. It takes us back to work that you did when we did PPE. And in this question, they've asked us to calculate the cash paid for the new vehicle purchased, the cash paid for the new equipment purchased, the cash received on the sale of the equipment. So all of those items are going to go in the investing activities section of the cash flow statement. And they also want to know the total depreciation for the year. The reason we want to know that is when we do the operating activities section of the cash flow statement, we always need to make sure we exclude depreciation because it's not a cash flow item. Okay. So they're giving us, and I've said this before, but please take note when you're looking at your balances, you see already how easy it is to get mixed up. 2004 is the current year, okay? So 31st of December 2004 is your closing balance, and it means, sorry, it's very hard to write with the mouse, and it means 31st December 2003 is your opening balance that you'll start with on the 1st of January 2004. So they give us the difference in the cost and they give us the difference in the accumulated depreciation for vehicles and equipment. They tell us a new vehicle was purchased for cash, but they don't give us the amount, so we're going to have to work that out. And they tell us that no vehicles were sold. So in this vehicles account, we can already see that there's an increase, and now we know that increase is going to be for this new vehicle that we purchased. They tell us that equipment with a cost of 75,000 and a carrying amount of 30,000 when it was sold for profit 5,000, and new equipment was purchased to replace it. So when we look at the difference in the balance between the equipment account at the beginning and the end of the year, we now know there was equipment sold and purchased. So we're going to have to reconstruct the equipment account and also go and reconstruct the asset realization account. Okay, so let's start looking at what we need to do. So the first, sorry, let me go back one slide. So the first thing you always do is you go and put in your opening and closing balances. So vehicles and accumulated depreciation on vehicles. I've put the opening balance in for the cost. It's an asset, so it is a debit balance of 230. And then I carry down the closing balance of 385. The accumulated depreciation on vehicles has a credit balance, an opening balance of 68,000, and it has a closing balance of 101. You would expect that accumulated depreciation's balance will always increase because obviously depreciation is getting added to the balance every year. Okay, so your first step is to put in the balances from the information given. Then your next step is to total what you know and put in the description of what you think it is that you need to work out. So for example, let me just look at the vehicles account. They've told us in the vehicles account that there was no vehicle sold, and they told us there was a vehicle that we purchased, which means there's going to be a debit entry in the vehicles account and the credit will be to bank. So to get that amount, I'm going to take the 385,000 from the credit side because it's bigger than the 230. I'm going to put it here on the debit side, and to get the balance, the amount that I've actually paid for the new vehicle, I'm just going to take the difference between the two, which you'll see on my next slide. The same way with the accumulated depreciation on vehicles. There was no asset sold because remember, if you have an asset sold, you're going to have to take out some of the accumulated depreciation. So there was no vehicle sold. So the only entry we're expecting is debit depreciation, credit accumulated depreciation. So that means we're expecting a credit here in a depreciation account. So I take this balance of 101 on the debit side, bring it across here to the credit side. If I subtract the 68,000, it's going to give me the amount of depreciation on vehicles for the year. Okay, so here is the amounts for the asset that we purchased, the vehicles that we purchased. You see that's the difference between the closing and the opening balance. 155,000 was spent buying a new vehicle. And then the depreciation, we take the difference between the 101,000 and the 68,000. And we see here depreciation on vehicles for the year was 33,000 Rand. Okay. The equipment is slightly more complicated because there was equipment bought and sold, but always start off with what you know. So we do have balances at the beginning and end of the year. So remember, equipment has a debit balance and accumulated depreciation, and equipment has a credit balance. So I'm ticking the amounts that we got given from the question. So we're now going to look at what is it that we need to be putting into these various accounts. Remember what we're looking for. We want to see the amount of money actually spent on buying equipment, and we want to see the amount of money we've received from selling equipment. We also want to know how much the depreciation was on equipment, because that amount is not a cash flow item and gets adjusted when we do the statement of profit and loss. So the next thing we're going to do, sorry, this thing is jumping forward more than I wanted to. Okay. So if I go back to my equipment account, what they tell me in this question is they tell me that we sold an asset, and they tell me the cost. So when you sell an asset, you've got to credit the asset account with the full amount of the cost of the asset that you've sold, and you're going to debit asset realization with the full amount, 75,000, okay? That's the cost. In the question, they don't tell us what the accumulated depreciation was, but they do give us the carrying amount of 30,000. So remember, cost minus accumulated depreciation gives us the carrying amount, which is why here I've simply taken the 75,000 minus the 30,000, which means this asset at the date we sold it, had accumulated depreciation of 45,000. That must now be taken out of the accumulated depreciation account. Remember, it's partially part of the opening balance plus depreciation until the date we sold the asset that we're taking out, and we're going to credit the asset realization account. And you'll see here at the bottom, I don't know if you can see it, is that the difference here between the 75.45 is the carrying amount of the asset of 30,000. So that's in your asset realization account. So that's the first step, using the information they give us in the question. Then the next bit of information they give us in the question, I'm going to see if I can move this slightly because I'm worried that you might not be able to see some of what I'm doing. Sorry. Okay, let's just go back. Oh dear, I want to move. There we go. That's what I want to do. All right, sorry, I'm fiddling around. So the next bit of information they gave us in the question is they told us there was a profit on sale of the equipment. Remember, profit is an income, so we're going to credit profit on sale of equipment and debit the asset realization account. So once we know the profit on sale of equipment, what that means is we can now actually balance our asset realization account, which I've done over here. The asset realization account now, the balancing amount is 35,000, which is the difference between the 80,000. That's the total of the 75 and the 5. And we then subtract the accumulated depreciation on equipment to give us the bank amount. Another simple way of thinking about it is if you know the carrying amount was 30 and we made a profit of 5,000, it means we must obviously have received 35,000 Rand for that asset. Okay, so we finished the asset realization account. Now we're going to look at the finishing off the equipment and the accumulated depreciation and equipment account. So in these two accounts, we are going to be putting in on the debit side of the equipment account the amount for the equipment that we've purchased, and on the credit side of the accumulated depreciation and equipment account, the amount of the depreciation for the year. So to get the amount for the equipment that we purchased, we're going to take the 75,000, that's the cost of the asset we sold, plus the 265,000, that's the cost of the equipment at the end of the year, gives you 340. If you then subtract your opening balance, it means we've spent 100,000 buying new equipment. And that will go on your investing activities section of your cash flow statement as a replacement, because remember, it's a replacement for equipment that we sold. And then on your accumulated depreciation on equipment account, we've got this 193,000, which is the total of the debit side, and we subtract the opening balance, which means depreciation on equipment for the year was 53,000 Rand. Okay, so what we've done in that question is we've gone to the ledger accounts, reconstructed them, and that's often what you're going to need to do in a question. So it's important that you understand how to put the ledger accounts together. Okay, I'm now going to open another set of slides. If you just give me a moment. Sorry, that's not the right one. Okay, we're going to find these ones. Okay. Okay, I've now got my next set of slides, and we're going to be finishing off by talking about financing activities and then balancing the statement of cash flows. Please don't be scared to type questions if you want to under the chat as we go along. If you want me to go back and repeat something, that would be the place to do it, or put your hand up if you're really brave and want to ask a question. So examples of cash flows from financing activities. If you issue shares or debentures, you're going to be having an inflow of cash. Okay. A student lifted their hand by mistake, I think. And If you receive money from the owners, that will be a capital contribution. That will also be an inflow. So these will be inflows, receiving money from issuing shares, debentures, receiving money from the owners if you're a sole trader or a partnership. If you redeem shares, like redeemable preference shares, that will be an outflow of cash. If you raise a loan, that will be an inflow of cash. But if you repay a loan, that will be an outflow of cash. Okay, so going back to our example 11.1 quickly in our book on page 292, we're now focusing for the financing section on equity and the non-current liability section of the statement of financial position. To get the difference between the opening and the closing equity, you're going to have to look at the statement of changes in equity to get what the breakdown is of the difference. And then the long-term loan, we can see the closing balance of 74,060 is higher than the opening balance of 62,300. So that 11,760 means we've received money during the year because we've got a higher loan. Okay, so that will be a proceed. You will see in the statement of changes in equity, it's reconciling the opening and the closing balances. And here the amount that the owner has contributed is shown as additional contribution, and that's what you want to show in the financing section of the statement of cash flows. In the property, plant and equipment note, there should be nothing relating to the statement of cash flows. And if we go to this section, again, this is basically from the statement of profit and loss. There's not much here that's going to affect the financing section of the statement of cash flows. So this is what the statement of cash flows financing activities section is going to look like for Karoo Merino farming. You saw in the statement of changes in equity that there was 29,650 contributed by the owner. That's an inflow of cash, so there's no bracket. And you saw the difference between the opening and closing balance on the long-term loan was 11,760. The long-term loan had increased. Remember, when we borrow money, it's an inflow of money to the business. So again, there's no bracket. The two amounts together add up to 41,140 being received from financing activities for the business. Okay, so the final part of the statement of cash flows that we need to do now is just to reconcile to the opening and closing balances of the bank account. In this question, we started off with 1,590 in the bank account and ended up with 34,700. So we're going to use those items now in the last part of the statement of cash flow. So if you now go and look at this last section of the statement of cash flows, you will see we've added up the 23,590. We've subtracted the 31,890 because investing activities is an outflow of money. And we've added 41,410 because that's an inflow of money from financing activities. That gives us a total inflow of 33,110. If we then add that to the opening balance of 1,590 for bank and cash, then we get a total closing balance for bank and cash of 34,700. So the last part of the cash flow statement is we add up the totals, subtract anything that's in bracket to give the net increase in cash and cash equivalents for the year. So in this business, their cash increased by 33,110 during the year. Okay. So that's the end of that example. Now I want to go and look at question 11.4. I did start this question in my previous lectures, but we're just going to end it now by doing the investing and financing activities section. Okay, somebody has just asked a question. I'm wondering if I can ask Mr. Besaidnout to answer that for me. Okay. So we're looking at, first of all, I'm going to be looking at the investing activities section. Mr. Besaidnout, are you still there? Okay, I don't know if Mr. Besaidnout, if you can see, somebody's asked a question, if your financial assets increase, is it an inflow or an outflow? And I'm just going to tell you that it's an outflow. The reason is the asset is increasing. You have to spend money to make the asset increase. So that's why it's an outflow of cash. The same way, when property, plant and equipment increases, then that's also an outflow of cash because we've spent money purchasing property, plant and equipment. Okay. So let's first look at the investing activities section of the statement of financial position. So here I've put a block around all of the non-current assets, which is land, buildings, equipment, and a brand name. I've also put a block around the revaluation reserve. The reason for that is if you look at land, the balance increased from 40,000 to 80,000. So in this question, it means there's been a debit, an increase of 40,000. Where did the debit come from? It came from the revaluation reserve because you see that is a credit balance and that increased by 40,000. So there's no cash flow effect regarding the increase in land, so we can ignore it because the increase basically is because we had a revaluation reserve. By the way, you'll also notice in this question that it talks about a CC, and I've actually changed it to PTY Limited because it's a perfectly fine cash flow question to use. But remember, we're not testing you on CCs in the exam. So the next item in your statement of financial position is buildings, and we see buildings increased by 21,000. You need to remember that because just now I'm going to show you the investing activities section, and that is going to be an outflow of cash because we've spent money. Okay. They have told us also in the question that there were extensions made to the buildings due to planned future expansions. So that will be an addition, not a replacement, that 21,000 addition to buildings. Then, sorry, it's jumping ahead. Let me just go backwards. What I've also done is I've just crossed out the accumulated depreciation balances because remember the changes in that account have got no cash effect. The brand name didn't change, so there's no cash effect there either. I've already told you about land and I've told you about buildings, but the equipment has got a change. There's an increase here of 21,000, and we'll have to see in the question if they give us any further information in order to explain that increase. Okay, so let's look at the further information. They tell us about depreciation, and now remember we've said that's not a cash flow item. So we've always got to, when we do our operating activities section of the statement of cash flows, ignore that, take it out. Profit and sale of equipment is also not a cash flow item. Remember, your cash flow on the sale is the amount you receive, the proceeds on the sale. And amortization of the brand name is also like depreciation, not a cash flow item. Here for equipment, they tell us equipment with a cost of 26,000 and a carrying amount of 12,000 was sold. We know something was sold because we've got this profit amount. And they also tell us that it was replaced by new equipment. So this tells me I'm going to have to go and reconstruct the equipment account so that I can see what the cost was of the replacement equipment. Okay. So my equipment account, I've put in the opening and closing balances. I know that I'm going fairly quickly here, but this is something that you can go and look at yourself. The solution is available in your question book. I'm going to try from tomorrow's lecture onwards to make it that we actually work out the question together where I type on the screen, but I need to get better at doing that. Okay, so the equipment balances, we've put in the opening and the closing balance, and accumulated depreciation in equipment, we've put in the opening and the closing balance because we were given that. The next thing is that we know about the asset that was sold, that the asset cost 26,000. So we take that 26,000 out of the equipment account, and we're going to debit the asset realization account. The depreciation on that asset was 14,000. How did we get that? They told us the cost was 26 and the carrying amount was 12. Cost minus accumulated depreciation gives you the carrying amount. So we take 14,000 out of the accumulated depreciation equipment account and we credit the asset realization account with that amount. That leaves us in the asset realization account with a balance of 26 minus 14, which is the carrying amount of 12,000 Rand. So that's the next bit of information we can enter into the ledger accounts. Then if we look at the asset realization account, I'm going to try and see if I can move this up. Sorry, I can't. The equipment ledger account is actually not in the solution. That's why you probably need to go and look at, I see Dylan, you asked that question, that these ledger accounts are actually not in the solution. So you should go and look at my slides where I've got the completed ledger accounts. Thank you for asking that. Okay, so the asset realization account, they've told us that there's a profit of 2,000 Rand. So we're going to debit the asset realization account and credit profit on sale of equipment. That gives us a total on the debit side of 28,000. So that means if we think about it, we had an asset that had a carrying amount of 12. We made a profit of 2,000. That means the proceeds on selling that asset must have been 14,000 Rand, because 14,000 Rand minus the carrying amount of 12 gives us a profit of 2,000. So that's going to go onto your statement of cash flows under investing activities as proceeds from selling an asset. Now we're going to go and complete the equipment account. So the equipment account balancing amount is 43,000. We had 26,000 the cost of the asset we sold and 78,000 being the closing balance. So that was 104,000 we carried across. If we subtract the opening balance of 61, that means we've purchased 43,000 Rands worth of equipment, and that's going to go onto your statement of investing activities as a replacement because it's replacing the equipment that we sold. And then just to finish off the accumulated depreciation on an equipment account, there's a balancing amount here on the credit side for 10,000. That will be your depreciation expense for the year. That's taking the 33,000 for the accumulated depreciation on the asset we sold, plus the closing accumulated depreciation, subtract the opening accumulated depreciation, gives you the depreciation on the asset we sold. The reason we want that, remember, is because it's not a cash flow item and we adjust for it when we do the operating activities section. Okay, so if we go now and look, it's definitely possible to be asked to do the ledger accounts in the exam. And anyway, you need to be able to do those ledger accounts. I'm answering Clinton's question because it's very difficult to work out, for example, in that question, how much the equipment replacement was, this 43,000. I don't know, you can try and do it without reconstructing a ledger account, but I find even I confuse myself if I don't. So that's why I'm showing you the ledger accounts. Okay, so this is what the statement of cash flows looks like, and we're looking at the cash flows from investing activities. Here we have the replacement of equipment, the outflow of 43,000 that I just showed you. Remember, we had additions of buildings, and we've separated that because that's for expansion purposes, and that was 21,000, and then the cash we received from selling equipment was 14,000. So we've got 43 and 21 that was spent and 14 that was received. So the cash flows from investing activities has a net outflow of 50,000 that was spent on investing activities of this business. Remember, we're preparing this to give information to the users so the users can see that in this business they've been spending money on investing activities. Okay, so now we're going to do the financing activities section of the cash flow statement. Remember, I said we need to now be looking at the equity and long-term loan section of the statement of financial position. They tell us here members' contributions, which I'm now telling you instead rather just call it share capital, because that's what it is when it's a company. That's increased by 20,000. If we're not given any other information, that means we've received another 20,000. It means we must have issued 20,000 Rands worth of shares during the year, okay? So that 20,000 increase is because we would have issued shares and received 20,000 during the year. Remember, we already dealt with the revaluation reserve. It's not a cash flow item. all it did was increase the value of land. Then the retained earnings, you actually need to go and reconstruct a ledger account there, often to see what's going on in that account. It's actually not vital for this question. I'll show you why now. But the one item that could be in retained earnings that's relevant is dividends. And so I'm going to show you the difference between the 35 and the 51, how we put that together. Then the long-term loan decreased from 25 to 19,000. That means we must have repaid the long-term loan. So that decrease represents an outflow of cash. Okay. So in the additional information, I'm going to use this to reconstruct the retained earnings account. They tell us the profit is 115, the tax expense is 31, and there was a dividend of 68,000. So if I now go and again, this retained earnings account is not in your solution, but there are going to be times when you're going to have to reconstruct it, mainly to get the dividends amount. In this question, we know the opening and the closing balance on retained earnings. I'm always looking for cash items because that's what I'm interested in putting into my cash flow statement. The profit after tax was 115. I subtract tax because I would already have done this in my profit and loss account. So my profit and loss account would have been debited and my retained earnings account is credited. The profit after tax for the year is 84. And we are told in the question that there were dividends that we've paid, and the dividends, the full amount is actually a cash amount in this question. There's no amount that we still owe. So that 68,000 you will have seen goes under the operating activity section as an outflow of cash, the payment of dividends to the owner. Okay. But for the investing activities section of the cash flow statement, there was nothing there that was relevant, but the dividends are important for the operating activities section. Okay, so if we now go and look at finally the financing activities section here of the statement of cash flows, remember the difference between the opening and closing balance of share capital was 20,000, and we said that was an inflow. We must have issued shares. Okay, so that's 20,000 we've received. The balance went up. We've received money, and we repaid 6,000 on the loan. That balance went down, which means we had to spend money repaying it. So the total cash flows from financing activities are 14,000 Rand inflow, 20,000 from share capital, 6,000 used to repay the loan. Okay, so finally, to finish off the statement of cash flows, we are going to balance to the bank balances. What's interesting in this question is that the opening balance is a debit balance and the closing balance is an overdraft. So if you just had to think quickly for yourself, this is plus 4,000, that's minus 3,000. So the difference between the two means our bank balance decreased by 7,000, right? Okay, so we need to be looking for a decrease in cash for the year of 7,000 Rand. So now let's look at our statement. So the first thing we do is we add the cash flows from operating activities of 29. We subtract cash flows from investing activities of 50, and we add cash flows from financing activities of 14. That gives us a decrease in cash and cash equivalents. This 50,000 is more than the inflows we got from the operating and financing activities. So that means this business spent 7,000 Rand, and we know that because the cash and cash equivalents at the beginning of the year were 4. So if we take the positive 4 and subtract 7, that is why we have an overdraft at the end of the year of 3,000 Rand. Okay, so that's what finishes off the statement of cash flows. I wanted to show you, yes, so I showed you here the 4,000, which was the opening balance of cash, and the 3,000, which was the closing balance. I've basically come to the end of my lecture. I'm going to, in the next lecture tomorrow, be doing question 11.5, and I'm going to try and actually do the question online with you so that if you have your question open and your solution open, you'll be able to follow the logic of how to put the statement of cash flows together. Please don't underestimate this topic. It's an important part of your exam. And I hope to see all of you tomorrow. And please invite your friends, because we do still have place in the class. I thought we'd have a problem, but we do definitely have lots of place in the class for more people to join us. Okay, that's the end of my lecture. Does anyone want to ask anything? Otherwise, you may leave. Please don't be scared to ask. I'm going to show you my face. Hello, everybody. If you'd like to ask me a question, here I am on the bottom of the screen. Otherwise, if you don't have anything to ask, then it's fine, but I'm waiting. Okay, so you must type in the chat, or otherwise put up your hand, otherwise leave the class. Thanks. Okay, so Refilware, do you want to speak? You must unmute your mic if you had a question. I'm not sure if Refilware still wants to ask something. Yes, hi Refilware, I can hear you.
Yeah, I want to ask, can you be given two bank balances to compare with the previous one, the statement that we're doing, to check if your balances are correct?
Okay, when you say two bank balances, you will always have an opening and a closing balance. Are you talking about having two closing balances?
Yes, the opening balance and the closing balance from the statement of financial position. Can you
Yes.
get that? And then
Okay. Yes.
can you, like, to make sure if you're correct from calculating it from the your cash flow statement?
Okay, I'm
Should
with you.
they should they be both on the same amount, or is it possible that they'll be slightly off?
Okay, so you will see in the cash flow questions that we always give you this year and last year's amounts. So the cash flow statement, one of the fun things that you do
Yes.
to work in business is actually making your cash flow statement balance. It has to balance exactly. Okay. So the differences in all of the difference for the operating activities, cash flows, plus investing, plus financing activities will give you an amount for the year, and that amount must balance exactly to the difference between the opening and closing balances. It is possible that we won't give you one of the balances, but remember in FRK 121, in fact, in accounting advice, we're not testing to make sure you can balance things. You're going to be balancing things in real life and business. We're showing you how to balance things. It's not like school where we're going to test that you can balance the statement of financial position. So I wouldn't worry too much about making the cash flow statement balance. You do, however, need to make sure that you're putting the amounts in as inflows or outflows correctly. That means with the brackets. Okay? But we are not going to ask you to we won't give you marks. We might ask you to show that balancing section, but even if it doesn't balance, you won't lose marks, because we don't want you to spend time doing calculations. We want you to spend time that we can see you understand the principle of how the thing is supposed to work. Well, I'm not sure if I've answered your question.
Yeah, you have answered it. Thank you.
Is that okay? All right. Anybody else? Mr. Besaidnout, I see there are 3 chat questions, but you are answering them. That's great. Don't be shy. Anybody else want to ask? Okay. So it takes a little while for this recording to download on ClickUp, but as soon as it's available, I'll put an announcement up, and I'll also, the questions don't get posted onto ClickUp, Refilware. So the only thing that will be posted will be the actual presentation that I've given you, and people will be able to hear my voice and follow the presentation. It will be in MP4 format. But it just takes a bit of time. I will tell you as soon as it's loaded. I'll send you an announcement with the link to how to download it. Okay. If nobody else has any questions, then that's going to be the end of the session. All right. Thanks, everybody, for attending. See you tomorrow.